The role of banks in economic growth and financial systems. To understand the true impact of commercial banking, one must step back and look beyond individual transactions. Imagine an entire economy as a living organism. Businesses are its muscle, consumers its energy, and governments its structure. In this system, commercial banks function as the circulatory, ensuring that financial resources flow efficiently to where they are needed most. Let's return to Daniel. After securing his credit facility, he invests in additional inventory and hires two new employees. His suppliers receive more orders, his employees earn wages, and his customers benefit from improved service. What began as a simple loan transaction now has ripple effects across multiple layers of the economy. This is the multiplier effect of banking activity in action. Economists have long studied the relationship between banking systems and economic growth. Research consistently shows that countries with well-developed banking sectors tend to experience higher levels of investment, productivity, and income growth. This is because banks play several critical roles simultaneously. First, they mobilize savings. Instead of idle money sitting unproductively, banks channel funds into investments that generate returns. Second, they allocate capital efficiently by evaluating which businesses and projects are most likely to succeed. Third, they manage risk, allowing businesses to operate with greater confidence even in uncertain environments. The following table highlights how commercial banks contribute to economic development. Beyond these roles, commercial banks are also deeply integrated into the broader financial system, which includes central banks, financial markets, and regulatory institutions. Central banks, for example, influence commercial banking activity through interest rates and monetary policy. When interest rates are lowered, borrowing becomes cheaper, encouraging businesses to invest and expand. When rates rise, lending slows, helping to control inflation. This interaction creates a dynamic environment where commercial banks must constantly adapt. They are not passive players, they actively interpret economic signals, adjust lending strategies, and manage portfolios in response to changing conditions. A compelling real-world case can be seen during periods of economic downturn. When businesses face declining revenues, access to credit becomes even more critical. Banks that continue to lend responsibly during such times help stabilize the economy by preventing widespread business failures. Conversely, if banks restrict lending too aggressively, economic contraction can deepen. Scientific studies in behavioral finance also reveal an interesting dimension: confidence and perception. When businesses believe that banks are stable and willing to lend, they are more likely to invest and expand. This psychological factor amplifies the impact of banking activity, making trust a central pillar of the financial system. In today's interconnected world, the role of commercial banks extends beyond national borders. Global trade relies heavily on banking services such as trade finance, foreign exchange, and cross-border payments. A business importing raw materials from another country depends on the banking system to ensure that payments are secure and transactions are completed efficiently. For aspiring banking professionals or business owners, the practical takeaway is clear. Understanding how banks operate within the financial system allows you to anticipate opportunities and risks. When interest rates change, when credit conditions tighten, or when new financial technologies emerge, those who understand the system can respond strategically rather than reactively. Ultimately, commercial banking is about enabling progress. It turns ideas into enterprises, supports livelihoods, and fuels economic development. Behind every successful business expansion, infrastructure project, or innovation breakthrough, there is often a commercial bank providing the financial backbone. And just like Daniel's journey, what may begin as a simple banking interaction can evolve into a powerful engine for growth, not just for one business, but for the entire economy.